Hello, everyone. Welcome to Smart Investing. I'm Albert, and today is November 1st. It is 5:20 p.m., and the markets are closed. So, for this video is going to be the banking services sector, also known as the banking sector. I'm going to do the 5 stocks like we always do. So, we're going to get right into it. First stock up is SASR, Sandy Spring Bancorp. Gonna see if it's a good stock or not. So, market cap is at 1.57 billion. We have here PE looks undervalued. Earnings per share seem okay. 52-week high and low, so we have a difference of 20, which is pretty good. And then the yield is at 3.87, close to a 4. Now, we want to see these shares, if they're being bought or not. So that's only about 1 million shares that are bought. It's pretty average, nothing crazy. Volume is about the same for the 3-month average. And we're going to look at the charting for this, the technicals. Now, I'm going to start it off with the 5-year. So, because the last 5 years have been a roller coaster, 2020 was down, then that huge recovery, obviously, then starting to go down. Then for 2018 and 19, those were bullish years as well. So for this stock, they actually remain pretty flat. They didn't go anywhere. So as we can see here, it's starting to go down. And then if we look at the 1 year, that's more of a downtrend as well. And you can see this leg down right here in October. So basically, October 19th, in a few weeks ago, actually, like 2 weeks ago. So that was a drop from like $5 in like 2 days. So that's a significant drop with that share price. So it looks like it's going to be in a downtrend. We had some uptrend here, but now, it's going to take longer for it to get back up again. So already 2 weeks have went by and still not even halfway up. So technicals failed. The fundamentals look okay, but we're going to dig deeper into that. Now the quant ratings. So for income and momentum is crap. It's telling me the quality is pretty good. It's good. So for the value, you're getting a decent deal. That's what it's telling me. It could be cheaper. But I mean, it looks cheap enough according to my 5-year chart. It could be a little cheaper. I mean, it's under the 5-year. And then also, the PE is at 9. I mean, I don't know how much cheaper this stock can get. So anyhow, the value is at 6.82, but the highest rating is quality. I want to see why. So earnings are dropping for Q3. Looks like they missed. And then the estimates are actually getting slightly higher as time goes on. So it might be tough for banks. Now, we want to look at the dividends real quick. So it looks like they are paying rising dividends. So for each year, it looks like they gave a 2-cent raise. So that's better than nothing. And as this year comes to a close, the next payment will be in November, since that was already a payout. These are the payouts. So in February, May, June, July, so August, and then November. So one more payment. I'm going to see if they have any splits. Last one was in 2001. Okay, that's not too bad. Now we're going to dig a little bit deeper for the financials. Can't wait to get 2022 results. A little slow. So it's not showing me anything that. So anyhow, moving on. Net income is at 235. So 2021, it's had a good year. Revenue's not showing me anything. Operating income is not showing me anything. Typical bank with high debt, over 85%. Now we're going to look at cash flow. So operating, investing, and financing. We're just going to add up all the sums and see what's the difference, if it's negative or positive. And then we will also want to see that with the net income as well. So for the cash flow, we have over 500, and they are cash flow positive at least 100 million. So they can definitely afford the dividend. And for a $1.5 billion company, again, they can afford the dividend. So overall, fundamentally, the stock is okay. But on paper, when it comes to the technicals, it's not giving me anything but a downtrend. So as of right now, I'm going to say no to this stock and pretty much hold off and look at this at a later date. And hopefully things will get better and it will be a better stock. So moving on to the next one is FMNB, Farmers National Bancorp. So we have here a share price of $13.87. Looking at the first page, we have here they do pay dividends. Earnings seem pretty weak overall. Market cap is at 472. 52-week high and low is pretty bad. It's undervalued. But again, with these main factors here, it doesn't seem like a good stock right off the bat. Now, technically, it looks like shares are close to 3 million that are acquired, and it has decent activity for the volume, not too bad. But again, it's showing me that it's in a downtrend for this whole year, obviously. And then if we look at the 5-year, it's looking flat. So with that already gives me like a no. Again, if it would have held up, above, that flat looking line. So we above the highs from, 2018 and 19. So we're looking at about $15. And then you can see here in 2021 and in 2022, it was fighting for that price range around $15. So then we look here at the last 3 months, and then it's just been going down. And then that actually started in September of this year. So right away, that was a big drop. So that was a $3 move. And now, even though it's trying to fight the 15, it's not even close to the 15. Barely cracking the 14. So it's not looking good fundamentally or technically. So it already gave me 2 out of the 3 factors that it failed. Highest rating for quants is income. So if that's the strategy for this stock, it's best used for income. But is it quality? Somewhat. That's what it's showing me. So we want to see the income for this. So I guess for the earnings, they're pretty neutral. I mean, they missed in Q4 2021, but as for 2022 results, it looks like they beat, and then they missed here barely. And then the estimates are almost about the same. So they're pretty flat. So that's actually not too bad. So it's all a matter of how they handle their cash flow and if they're earning a little bit more and if they can handle their margins properly. Now, debt, not surprised at 88. So what are their margins? It's not showing me. Net income is at 51 million. So as you can see, their net income has been increasing year to year. And then we have here the balance sheet. So it's a small balance sheet. A very, very small balance sheet. I think this is sort of inaccurate because if this is a $472 million market cap company, I'm sorry for the incorrect information, but I don't know why it's saying 4 billion in assets and 0.6 billion in debt. And then that's actually inaccurate because that's, way more than the actual market cap. So that doesn't even make any sense. So I'm just going to disregard that. So as for cash flow, hopefully these numbers are correct. So what I have here is the cash flow negative. So we're looking at about, so that was so around 275 and 425. So we're looking at about 150 million in negative cash flow. They should not be paying a dividend actually, or they should pay as little as possible. They can't even afford the 16 cents that they're paying out now. They should actually be cutting dividends. So as you can see here in 2020, they paid 11 cents. And then in 2021, they paid 11 cents for most of the year. But the final payment in December of 2021 was 14 cents. And they increased the dividend as well. I don't know why, if they can't afford it. So this is a bad company. This is a very bad company and very mismanaged. It makes no sense to me. I don't know why would you pay dividends if you can't afford it. I know it sucks for investors, but again, the company itself comes first just so it could be sustainable. But again, I don't think they care about that. It's just a money grab for the management team, I guess. So moving on to the next stock, COLB, Colombian Bank or Columbia Bank. So pretty active on the volume, above its 3 month, slightly undervalued, so slightly, it's fairly priced, so it has a slight discount. Earnings could be a little bit better. 52-week high and low. I could live with it. It's okay. Again, I can live with it. Could be a little bit better. Market cap 2.6, so not bad. Free float at 78 million. And shares outstanding 78.65 million. Not a lot of people are buying this stock. So what that tells me, it's very unpopular and pretty much a hidden stock. Now, if we look at the 5-year, it looks pretty flat. But as we can see here, the only big drop it had, real big drop, obviously in 2020, but here also in 2021. And then for 2022, it only had a big drop in April. Ever since then, it hasn't really dropped much, and it's actually been fighting for the uptrend. So this stock ain't too bad. I mean, yeah, it's gone flat. It's gone down and flat, but now it took a really big uptrend here within the past month, I would say. And obviously because that's that bear market rally, that relief rally for a few months, and then it'll go back down. So uh, anything's possible. I think obviously that's a good move to hold off on it. I agree with that. Now, as far as technicals, I would like to see the price range above at least 38 to be on the safe side. I think once a break of 38, then more shares might be acquired from investors, and it could start gaining popularity and interest from people. So for now, it's not good or it's not bad. It's just, to hold off on the stock uh, and see what it can do. So for the highest rating for this stock, it has value. So obviously for the price, it's at a slight discount, and everything else is below a 5. Well, close to a 5. But the overall rating they gave it a 3 out of 5. I'm just not too sure. I guess a 2.5. So if you round it off to a 3. So estimates for Q4 have dropped down a lot. Even though it seems pretty flat, I would say sort of flat for the most part these last 4 quarters. So if they can actually surprise earnings, maybe they can go on a big uptrend. So earnings estimates are at 32 cents. So that's the lowest so far comparing to the last 4 estimates. And hopefully they beat it. And then again, like I said, this is a stock to hold off on, to, not to put on the watch list yet, but it has potential to be on the watch list. So as of right now, I'm going to say no as well. And we'll move on to the next one. Look at the dividends real quick. So this company, real quick, also, they have paid special dividends ever since 2016. 2017, nothing. 2018, 19, 2020. So not bad. Not a bad company. Just you just gotta wait and see, pretty much. Next stock up, BSBR. So for this stock, we have here pretty active, pretty cheap. 21 billion market cap, fairly priced. Dividend yield is pretty high. I don't know if that's sustainable with an earnings per share that low. I don't like it. I'd stay away from it. I mean, they can have 100 billion in market cap, but if it doesn't look sustainable, then I'd stay away from it. And I think that's why it has these bounces, just to cash in and out. But then also you see it's pretty flat ever since 2020. So I don't see it going up anytime soon. And if it does, it'll probably make a $2 move, and then that's pretty much it. So on the technical side, it's not even worth it. So again, it does have some momentum, but it's just not worth it. Fundamentals, it failed. Technicals, in my perspective, it has failed. Quant rating, it's not showing me anything. So right away, earnings have missed like crazy. See that? That's horrible. Missed all 4 and by a lot. I don't even want to look at the dividend, but I'm going to look at it anyway. I don't know why they're paying a special dividend. This is just insane. But I just don't get it. I just don't get it. I think they're paying dividends and then also the special dividends just to try to gain attention. But this is why we review stocks, because we want to see if it's a good investment or not. So they do have cash flow. I will give them that. They do have very strong cash flow. And I wouldn't be surprised if they're doing stock buybacks. I guess their earnings this year have been pretty horrible, and they've received a lot of downgrades. And maybe some people have given them upgrades. But for the share price and for everything in it, I mean, obviously they may have a bad year, but again, I still think it's a trap. It's not sustainable. And then only for 4 cents for the dividend, and then the special dividend is at 4 cents as well. So again, Santander Bank, special dividend paying bank for this year, and this has been a horrible year. I don't know why. And then if you see in 2021, they haven't paid no special dividends. Yes, they received an extra payment because, we count 1, 2, 3, 4, 5. And typically there's 4 payments for dividend stocks. But apparently, I guess they're having a monster good year, and they're paying pretty good this time around. So we have here in total 1, 2, 3, 4, 5, 6, 7, 8 payments. So this is just a trap, as I call it. It's just a trap. So splits, they made a split in 2021. So that's a huge ratio. So 104,417 for 100,000. I don't even know why they chose that number, but it is what it is. So again, I would say no. I mean, I know some people are gonna look at the dividend yield and say, wow, that's not bad. The 7.58 and with the special dividend, but again, this is not a stock for the long term. Maybe to get in and out, yeah, maybe to collect 1 or 2 dividends. I'm not suggesting it. I'm just thinking that's a scenario in which what people might do. I wouldn't risk it. I don't like the stock. Again, it's a bad stock. They do have strong cash flow, again, but it's just not worth it. This stock needs some work. And aside from a bull market, it needs to do well in a down market as well, because next year is going to be horrible as well. Last stock is American First, ticker symbol ATAX. So had a strong rebound from 2020 to 2021. Still flat, but has not reached new highs. So $412 million market cap. PE is very undervalued. Earnings could be better. 52-week high and low. Pretty bad. Could be better than that. I would like to see more action. Chart needs to do better as well, but it's getting there. I can see some, range within that, and it's refusing to go down. So that's actually good. It has held up, which is a good sign. And so we have here analysis real quick. So for the growth, I think growth, I don't know about that, but quality seems to be second favored, and then the growth is close to a rating of 9. So overall, it received a 5 out of 5 rating, and the income has not been too bad. Least number for the rating was momentum, which came out of 4, which ain't bad for the given factor. I mean, if I had to choose which would be the most importance, depending on the strategy. But overall, I would say it would be these are the most important. These two can happen at any time. So for the majority, if I had to choose, and in a certain order, it doesn't really matter. But again, they're all important. But if you had to rate them, then that's a different scenario. So for the fundamentals, again, they need a lot of work. I just don't see it. I could be wrong. I would have to look at the website and know more about the company. But from what I see by the numbers, they need work. They look okay though, but they need work. So they've beaten estimates for Q1. They missed by a little. And the estimate for Q3 2022 has not been reported, but they have lowered the estimate, which can be a good sign, and hopefully they can beat the estimate. Now for the debt, is pretty low. Right away, I see a debt percentage that low. I'm thinking they're not a bank. They're probably in consumer lending. Oh, they are a bank. So they must be doing some sort of investment. They must be doing investment banking. So their margins must be pretty high then. Are they selling to farmers or something, renting out land or something, or they own land, or I don't know. I think that's why they rated so high. Their margins are pretty high. Really, really high for a bank as well. So return on equity, which one's higher? So it must be something that they own, not through management doing it. That's what I'm reading. That's what the numbers are showing me and giving me. Earnings have increased last 2 years. So 2017 and 18, they grew, but then they dropped in 2019. In 2020, they had a horrible year. So I would assume they are cash flow positive. And then their net income is at 38 million. So investing 182, 33. So they are cash flow positive. This company is cash flow positive. So as we can see here, it's not giving me any information for dividends. I'm sorry I lost connection. Please bear with me. Hopefully it comes back. And if not, this was the last stock anyway. So I appreciate you guys sticking with me through this anyway. So it looks like they do pay the special dividend. I'm not sure if they are a frequent payer or if they're consistent about it. But again, you can see here they did pay one this year. And the regular dividend was at 37 cents. So I'm not sure if they pay rising dividend as well, but the company seems okay. What I would like to see really is their earnings get a little bit better, and maybe they can go to new highs. So, for this stock, I'm actually going to say yes. For this one, for a watch list. Again, they're undervalued. Their earnings could be a little bit better. They're not bad. They could be a little bit better. I'm not looking at the yield, but based on their debt load and their margins and and on top of that, with the cash flow, they seem pretty good. I don't know what they're doing. We're going to read it a little bit real quick. Hopefully it can tell me no. So, I lost connection for this one. So anyways, so they acquire, hold, and sell, dealing with a portfolio of mortgage revenue bonds. So it's almost like they're an advise a group of bankers that are advisors, and they deal with bonds and, you know, portfolios and stuff like that. They're heavy into portfolio management and all the works. So again, this stock is actually pretty good comparing to the many banks that I've looked at. So again, nice stock, and hopefully I can get more numbers on the dividend information. That'll be, I guess, at another time. And I guess I lost connection at the right time. So anyways, thank you guys for watching. I hope you guys enjoyed the video. If not, like, comment, subscribe. If this video is too long, stay tuned for the shorter version. I know a lot of people don't like the long version, but it is important because evaluation always matters. So again, thank you guys for watching, and I'll see you guys in the next one.